Okay, everybody, welcome back. Episode 3 for the YouTube channel to show my passive income evolution. So I hope that you're having a great week. It's been a quite busy week for me the last days, so I couldn't post the video during the weekend, which is what I wanted to do. But we made it for today, and we are here to do it now. So just to show you, I wanted to show you what is the current status of the portfolio. So as you can see, the current estimated value is 94k euro. So it's a pretty big bump since last week. I made, first of all, I received my monthly paycheck, and I made a big investment for me. I mean, it's a lot of money. I put 4,400 euro in the portfolio in different stocks. So that is a big amount of money. Everybody is in their own path, okay? And for some people, this will be like an impossible amount to add in a month, and for other people, it will be like a small amount. It depends on what is your position and how much income are you receiving and saving for investing. So it's been a pretty crazy week last week, okay, in terms of how the market has evolved. Stocks have gone a lot up, especially Apple, okay. So right now I'm more than 17% up since last year when I purchased them. And we are going to talk about those results. I've zoomed in this Google Sheets so you can see better what is the behavior of the portfolio. So right now the portfolio is gaining around 3.74%. So as a recall, I started most of these investments in August 2019, okay? And the yield on cost right now, since I purchased this, is 3.93%, which is a pretty good amount and what I want it to stay. So let's talk about Apple for a minute, because Apple presented the Q4 and FY19 results, okay, for the whole year, and it beat the Q4 sales and profit targets of what the market was expecting, okay. And for me, it's very interesting how the market behaves, okay, with all the companies, but also with this one. Because last year, let me go here to Yahoo Finance for showing you a graph. At the end of last year, or sorry, at the middle of last year, Tim Cook, which is the CEO of Apple, started to not showing how the number of iPhone units sold was performing, and this was seen by the market like bad news. It meant that the company was selling less iPhones, which was the base product for all the past performance of the company and the future of the company. So the stock began to dip, okay. Since Q4 of last year, we saw a very big dip, okay. I suffered it because I entered Apple like around this time, more or less. So it went to the lowest point of $142. And at that time, Tim Cook was telling the market, okay, and the investors that it was not important, the number of units they were selling of iPads or iPhones or all of this, because the important thing is that the revenue was going up, especially revenue on services, and that they were transforming the company and moving a revenue stream more to the services instead of only selling products and more units, okay? Because Apple customers were taking more time to refresh their iPhones and their iPads and their products, okay? And they were taking longer cycles to refresh their products. And so far it has gone very, very good for the company, this strategy, because they have posted every quarter highest revenues, okay, especially because of the services. They announced during the middle of the year that they were going to be releasing by now Apple TV Plus, which was going to be a streaming service to compete with Netflix, HBO, and other streaming services. Okay, they just released it this November month. Okay, during the Q4 release, and since the beginning of the year, the stock has gone very, very up. Okay, until top target of $257 during 2 days ago. So as we can see here on the results, they reported a revenue of 64 billion, okay, for the fourth quarter, and it was beating also the expectations on revenue per shares and earning per shares, okay, with $3.03 per share. iPhone revenue fell again, but the company's wearables and services business has continued to grow, okay. So revenue grew altogether 2% year over year in Q4, okay, exceeding a little bit analyst expectations. But the important thing is that the new iPhones that were released a month ago, the iPhone 11 and iPhone 11 Pro, have been received very good by the market, especially the iPhone 11, because they lowered the price compared to the iPhone XR, and it's now, I think, around $699 or something like that, and it's a sweet spot for all the people that wanted to buy iPhone and still having a pretty good device, okay, for the money and not having to spend $1,000, okay. So the key numbers, if we go here, okay, earnings per share, this says that this was the smallest iPhone decline since 2018. So even if the iPhone revenue is falling again, it's falling just short, okay. They are also beginning to see traction of their Apple Pay and Apple Card, the new product that they released last year. And the services division grew to 12.5 billion, an increase from 10.5 same time last year, and now accounts for 20% of Apple total revenue. So this is what Tim Cook was saying 1 year ago. This is the important thing, okay? So if I go here to the official Apple revenues page for the investors website, okay? So we concluded, he says, Tim Cook, Apple CEO, we concluded the groundbreaking fiscal 2019 with our highest Q4 revenue ever, fueled by accelerating growth from services, wearables, and iPad, with customers and reviewers revving out the new generation of iPhones, today's debut of new noise-canceling AirPods Pro, and for me the most important thing is the wholly anticipated arrival of Apple TV Plus just 2 days away. So they expect to be a pretty big thing of Apple TV. I think they have poured around $9 to $10 billion already in producing and new series and TV shows and hiring actors, very well-known actors as Jennifer Aniston and Jason Momoa and others, okay, for their series. And I think they expect a lot of revenue coming from there, and building up even more on the ecosystem where Apple owners, consumers that have Apple products, it's more difficult for them to get out of the Apple ecosystem, okay, because all the products interact between themselves. And now they are giving away 1 year of Apple TV Plus services for every customer that buys a new Apple product, like an Apple Watch, Apple iPhone, even refurbished units, or iPad or Mac, okay? And that 1 year subscription allows them to have 5 accounts for their family members. And after that 1 year, the cost of the service right now is $4.99 per month, which is quite lower than Netflix and HBO, and a little bit lower than Disney Plus, because of course they have a lower portfolio of series and TV shows. They are just starting. Is the service with the lowest amount of TV shows right now, and they know it, but they want to gain traction with the users and grow very fast the number of users in the beginning of the service. So let's go to see the main topic of the video, which is capital gains versus dividend income. Okay, what's the difference? And I've gone to this website, Investopedia. So many people, let me go to the Google Sheets. Many people invest in a way where they are investing in companies, okay, and they are waiting for those companies to be more valued by the market, okay, and growing during the time they are investing, okay. And some of those companies don't pay dividends. It was the case, for example, when I had Tesla, okay, before. So you are just waiting for the market to value more those companies, depending on the market sentiment, depending on how those companies are performing in terms of earnings and profit and net income, okay, and what are their expansion plans. Like if we go and look for Amazon, for example, it would be that example, or Facebook or Google, okay. Those are growth companies that are in growth mode, and that they are expanding more their services and their portfolio and in more countries to be able to grow the stock value, okay. And the other way of looking at it is dividend income, okay. And this is how most of my portfolio, most of my strategy is based on, okay, on investing in stocks that are paying this amount of money every year, okay, $71, $147, $178, $652, $395. So for me, that right now is 270 euros a month, okay, and I reinvest all those dividends that I'm receiving, all that income, I'm reinvesting it again in these stocks, okay, and growing more my portfolio, okay. Here you can see it. Right now I've passed the mark of $100K, which is a milestone for me. I've never had this big, this amount of money invested. The highest that I had invested in my life was like 40K euro at the time, like 3-4 years ago. So which is the difference, okay, according to this respectable website, okay. So we can read both capital gains and let me zoom in here, okay, so you can see it better. So both capital gains and other investment income, such as dividend income, are a source of profit and hold potential tax consequences. Here's a look at the differences between the two types of income and what each one means in terms of investments and taxes paid. So capital is the initial sum invested. So capital gain is a profit that occurs when an investment is sold for a higher price than the original purchase price. So the investors have to wait for that stock to have a higher price during time and decide when to sell or not to sell. With dividends are assets that are paid out of the profits of a corporation to the stockholders. The dividends an investor receives are not considered capital gains, but rather income for that tax year. So companies earn profits, okay, and from the profits they gain, they reinvest in the company expansion some part of those earnings they get, that income they get, and the other part that they are not reinvesting, they decide to give it as dividends to all the shareholders, okay. So this is the way I am investing in my strategy throughout the years to make possible the compound interest that I was explaining on the first episode, okay, and grow my portfolio during a long time period, because my strategy is for the long term, is for the next 25 years, okay, and be able with time to increase this amount and be able to live off of this income that I would be receiving every month. So I want this to be able to pay all my essential needs, like paying my utilities, paying my internet connection, my mobile phone, my food, my leisure, okay, and my vacations, my travel, anything related to my home that I'm paying, for example. I hope not to have to keep paying for my mortgage in like 4 or 5 years time, so it's not going to happen in 25 years, okay? So key takeaways: capital gains are profits that occur when an investment is sold at a higher price, and dividends are assets that are paid out of the profits of the corporations to the stockholders. Okay, so this is an example of dividends, okay, basic example. So as an example, consider company XYZ, previously mentioned. The investor who bought 500 shares of stock at $5 per share for 2,500 benefits when the stock price rises. Regardless of the moment in the price of the stock, the investor benefits when the company XYX announces a special dividend of $2 per share, and they net $1,000, okay? So taxes are different in these two considerations. So capital gains are taxed only when you sell that stock. So you can be without paying taxes for, like, for example, 5 years, 2 years, 20 years, and you are only going to pay taxes on the money that you earn when you sell the stock, okay? And dividends are different. Dividends, and some people, they don't recommend them because, and I think this is misleading. They say that this is a more taxable type of investing, and I don't agree with that, because every time you are getting dividends, you are taken out by the tax of the government where the dividends are originated. You are getting a part of those dividends, okay? And there are two types of dividends, okay? Qualified dividends and not qualified dividends. And we will see it in a minute, the difference, okay? But most of the dividends are taxed at around 15% in most of the countries, okay? So tax is only calculated on the net capital gains for the year, and are determined from the capital losses from the capital gains. For most investors, the tax rates for capital gains will be less than 15%. All ordinary dividends are taxable and must be declared as income. Qualified dividends are taxed at a lower capital gains rate, okay? So what is dividend income? Okay, let's go to the Motley Fool website, okay? So how is dividend income taxed? If a dividend meets the definition of a qualified dividend, it will be taxed at a lower tax rate than the ordinary income. If not, it will be taxed at the investor's marginal tax rate, okay? So let's go for that and let's see what is the case. What is a qualified dividend? In order to qualify for a lower tax rate, a dividend you receive must meet these two criteria. And this is for the US, okay? But this applies for most developed countries. The dividend must have been paid by a US corporation or qualified foreign corporation. You must have held the stock for more than 60 days during the 121-day period, starting 60 days before the ex-dividend date. So this means that you cannot be speculating with buying and selling companies only for earning the dividend. These are for longer holding periods of time, okay? Preferred stock has a longer holding period requirement of 90 days out of the 181 days period starting 90 days before the stock ex-dividend date. Examples of dividends that are not qualified dividends include capital gain distributions, such as distributions when a company sells a property, dividends from a tax exemption organizations, dividends paid on bank and credit union deposits, and certain pass-through dividends. It's also worth noting that if you are enrolled in a dividend investment plan, a DRIP, this means that automatically every dividends that you are getting reinvested in those plans. Your dividends are still taxable, even though you didn't actually receive cash. For a thorough guide for a taxation, check out the IRS website. Another interesting thing is looking at dividends income when you are investing in companies inside a retirement accounts. Retirement accounts in the US, for example, are the IRAs and Roth IRAs, like individual retirement accounts, and the 401k. The 401k are like pension plans, we could call them in Europe, okay, where the employees put some money in there, okay, in the 401k. They can only retire that money when they retire, okay, or in special situations, for example, of long-term unemployment. And the company they are working for, normally they will match their 401k, or they will put additional amount, a percentage of what the employee put in the 401k account. And these are tax deferred accounts, okay? While after tax accounts like both IRAs are tax free, okay? This means that tax deferred, it means that you will only be taxed when you rescue that 401k plan, that money, when you are like, for example, 60 years old or 65 years old and you are retiring, okay? So the money will be eventually be treated as a taxable income when withdrawn, but investors are still free to let the money compound year after year in the meantime, okay? So this is the main difference between capital gains and dividend income. So I wanted to show you the Revolut portfolio. Okay, so let's go to Revolut and check how the Revolut portfolio is looking and which stocks I invested in during these past days. Okay, so we are now in the Revolut trading app. Okay, so as you can see, my portfolio has increased quite a big amount for me. Okay, to $52,000. Since I started investing in this in September, the Revolut portfolio I started it in September. It's gone up 3.38%, but that is not the important thing for me. The important thing for me is how dividends are rolling out, okay, every month, and how I am increasing the amount of dividends I'm getting every month. And one thing that I like is that I got paid the first dividend for the first time. So if you click here in transactions, you can see that I got paid $40.5, and I got subtracted a tax of roughly $6. Okay, so if I click here, I can see that it's from JP Morgan Chase. Okay, and here it doesn't say anything. This is the thing that I don't like about Revolut, but this is the tax that was taken from the US government. And the thing that I don't like is that as I am a Spanish taxpayer, okay, and this Revolut account is in Europe, it's in the UK, but it's in Europe, they should also be detracting the tax that I should pay for the Spanish government, okay? And in the next episode, I will be talking about how dividends paid from foreign companies are treated in tax in the country where the dividend is originated and in the country where you are living in and where you are purchasing those stocks, okay? Because there are important things to have into consideration. So this is the behavior that is having now the stocks, okay? And to show you the transactions, so I bought some extra IBM stocks to compensate because the stock is falling since last week when the company presented the results, okay? And I was evening out the result. So on October 31st, I made all the purchases. So I purchased more stocks of Coca-Cola, Disney, Johnson & Johnson, IBM and Pfizer, and I started to invest in Microsoft with a small amount with 3.5 shares, okay? And I invested in Microsoft, even though it's right now at a very, very high level. Let's see it here. If I go here to Microsoft and I look at the last year, it has gone very, very up. And if I look at more years, it's even more, okay? So Microsoft still has a lot of room to grow compared to Amazon. because they just started like 2 years ago their cloud business, 2 years, 3 years, and they are now beginning to exploding their cloud revenue. And this is a subscription based model for all the cloud model. All the companies that are building applications and lifting applications to their cloud business. And it's very sticky service. It's not easy to take out an application or your data from the cloud, from the public cloud, once you have uploaded it. And Microsoft has one advantage, and it's their hybrid cloud and their hybrid cloud solutions that they have with the main server vendors like Dell Technologies or IBM or Hewlett Packard or other server vendors. Okay, they can run their cloud also on premises on customers' data centers, and they have a pretty good advantage over there. Okay, so that was all for today. That was what I wanted to show you. Okay, so I hope that you have a great week, everybody, and I hope that you are liking the videos. So far, so good. The number of visualizations are going up. So I would thank you if you like the video and subscribe to the channel. And also, I wanted to tell you that you can contact me at any time at passiveincomeevolution@gmail.com, passiveincomeevolution@gmail.com, for any comments or a comment on the video. I wanted to show a comment that one of the readers put on the YouTube. So let's go back to YouTube and show you that comment for a minute. So here we can see the comment from Alejandro Cajicas. So even though the YouTube channel is in English, he made the question in Spanish. So I suppose he listened all the first video and the second one, where I was saying where I'm from. So I will translate his question to English, okay? So hello, very interesting video. You have a good portfolio. One question. It seems to me like in your history of purchasing since the Revolut app, you have purchases of a few $1,000 at one time. Is this possible? Because in the Revolut web, I've seen that the operations, the individual operations, are limited to $1,000 each. What do you think about Revolut as a platform for trading and investing? So, very good question, okay, Alejandro, and thank you for participating in the channel and asking. So, as I was replying to him, it's true that Revolut limits every operation that you do to $1,000. Okay, it doesn't let you to do a higher amount of operation, but you can do several operations in the same day. So if for example, if you want to buy $3,000 of Microsoft, okay, you would have to put three orders, okay, purchase orders for $1,000 each. Okay, so you can do it in the same day and in a few minutes. And what do I think of it as a platform? Well, I think they are just starting. So right now it's very simple and easy to handle, but it's too simple for me. They don't have advanced tools. They don't even have the possibility to put stop loss orders, okay, which is quite important to protect yourself against volatility. And they have some limitations because you can only invest in a bunch of hundreds of American companies, but not all of the companies are there, okay? So for example, I cannot purchase Dell Technologies or VMware or many REITs, okay? They have only like 5-6 REITs present in the options you have to buy, so they are quite limited. So okay guys, so that's all okay for today. Again, I hope that you have a great week, that you are enjoying the videos, and this is useful for you, and we all learn together in this path and with these videos, okay? So see you on the next one. Take care. Bye bye.